Hey, welcome back. Welcome back to another episode of Forex Tech Magazine. This is your host, Lewis. And before we get into this, let's get right into our disclaimer. Today is December 11th, 2018. The disclaimer goes a little something like this. Any and all information given to you or given by Forex Tech Magazine should be considered to be for educational, entertainment purposes only. Nothing that we share with you should be considered to be for financial advice. If you are in need or you're seeking financial advice, then our suggestion to you would be to seek out the assistance of a licensed um, financial advisor. Okay. So with that being said, let's go ahead and get on into what we're getting into today. Sweet. The first one we're looking at today is the Great Britain pound, New Zealand dollar. Now, as you may well know or may not know, I don't know. We actually had a trade going on in this particular pair, and we hit our price target yesterday. Our price target was in here, and you can see by the chart here that this price has been trending downward as of late. You see our fib. No, excuse me, our fib technical analysis here on the chart where we had a B price move, and then we had the C retraction, and then we had the D extension, which brought us out to here, which is pretty cool. And actually, the full D extension should go out this way, but we placed our take profit here, and the reason being is just because one, didn't want to be in this trade for an extended period of time, and two, I like to put my take profits around support and resistance zones, just because these are places in the past where price had recognized that U-turns or a place where price was drawn to, and so I always like to kind of put my take profits around those areas, because price tends to repeat itself. It's like history, right? So history tends to repeat itself. Same thing with price. It tends to repeat itself over time. Anyway, I was able to get that yesterday, which is pretty cool. Let's see here. The haul on that one was, what's that? Was 216 pips and made $8,949.30. That's not bad for about 2 days worth of work, right? Now we still have one trade on the books. And there's the Great Britain pound, Australian dollar. Right now we got that in risk-free trade mode. I'm gonna look at this real quick. We're slowly approaching our risk-free trade, our stop loss. And if it hits, it hits. I mean, it's no biggie. We'll take whatever money we make and just kind of go from there. But we put our stop loss back up here at this swing, because we want to try to capture as much as possible at the same time, leaving it room to be able to run. Probably what will happen, it probably hit this one and not this one, and then proceed down. And if it does, it is what it is. I don't care. Right now it's 140 pips, and it's about 6,000 some odd dollars, which is pretty cool. Once again, I'll take 8 and 6. That'll leave us about 14. Still not bad for a day or 2 days worth of work. I'll take it. Beats working a 9 to 5 any day. With this particular pair here, we have our take profit once again here at a support line. All right, this is our take profit. As you can see, the sequence has been downward momentum. All right, prices have been moving down over a period of time, and so we anticipate the price still to move down, have some more downward momentum. The candlestick yesterday was actually a pretty bearish candlestick. It knocked out 2 days and went into a third day actually um, upward candlestick. So that's pretty definitely a really good bearish signal. Looks like right now having a bit of a pullback, and so that's what we got to kind of handle right now at the moment. You know, how far will this thing pull back? Will it continue to pull back into this into my stop loss, or will this pull back go ahead and just reverse and keep going back in the direction that originally going towards, which we'll see here shortly. While we're waiting for this to kind of figure itself out, let's roll over and look at some. Let's look at some other currency pairs and see if we see anything that looks good for the trading day. Okay. Great Britain pound, Canadian dollar. Let's see what we got going on here. Break it up off of this chart, go into my daily chart. So once again, we hit some support resistance lines. We're seeing some green, right? Yesterday was a good sell-off. You know, had a good sell-off over the last 2 days, and now it's starting to pull back and recover a little. And so the question you got to ask yourself, because it's right there on that support resistance line, is this a legitimate recovery? You know, where it's going to actually push back up and try to hit towards this level of support? Or is this right here just a temporary pullback and then it's going to proceed to move back down? It's one of the hard things about trading. Currency pairs is moving sideways, so just a little tip. What it's like to do is kind of zoom in a little bit lower time frame, right? And so now you can get a better idea, kind of see what's going on a little bit more, right? And you see this chart trying, you know, made its low here, right? It's pulling out maybe a high, low. And something like this right here, me personally, if I was going to trade this, and I think there probably are better currency pairs to trade right now at the moment, but if I was going to trade this, two things were going to happen. One, stop loss is going to be below the swing low, right? Two, going to have to see price, right, make a move up, then, you know, wait for the pullback and then probably get in off of that dip, that move up. Or, here's the other one, the or, you know, price, you can always get in, you know, put a buy entry above a significant swing high if you're trying to do a price, if you're trying to do a buy-in. Now, the problem is with this particular pair is because your target price is actually here, the stop loss is back here, and then if that was the case, the last scenario, you know, your entry would be somewhere around here. The only thing that makes this good is because when you put your entry price above a swing high or below a swing low, you're banking on momentum. You're banking on that there's enough energy in this currency pair, enough money coming into the market that's going to push this thing past that swing high or whatever, or swing low, and push it towards your target, right? The bad part about this could be that you can just get a temporary spike, you know, based off of some type of announcement, some type of news, and then all of a sudden this whole thing just goes, you know, and it goes past, you know, your original stop loss, and then you take a significant loss. So with these right here, you got to really be careful. You got to really be careful. This right here is for me personally, it's probably not worth the risk. If I were going to get into it, I probably would do a buy just because we're coming off of a support. You remember when we want to buy off support and we want to sell off of resistance. So for me, it's probably more or less a buy, and then put a tight stop loss in, and might even put a tighter take profit, you know, right up in here. And the reason being is just because, you know, for even though this right here might be the ideal target for this particular pair, it's nothing to say that it's gonna hit it right off of me buying into this pair. As you can see over here, same idea, right? Hey, price is coming up off support. Yeah, it looks pretty good. It had a couple candlesticks where it was it was pretty bullish. Let me go ahead and buy, and then all of a sudden, price starts reversing, right? Price goes up, price reverses a little bit, price comes up, price reverses again. You follow what I'm saying? So there's this ebb and flow to the market where price goes up, price comes down, price goes up, price goes down. That it eventually gets to the target, right? But it's not necessarily a straight line or a straight shot to the target, right? And so, kind of knowing that, kind of puts you in the mind frame to say, hey, you know what? Maybe when we're in the process of trying to get to the target, be a little cautious and wait for a better setup to be able to get us, to where we need to be at, right? And that's the idea, right? Waiting on those better setups to come into place that's gonna get you to where you need to be at. Because at the end of the day, you can have the right idea, the right mindset as far as where price is gonna go. You can do the analysis and everything and be on point as far as where price is gonna go. But you just don't know what path price is going to take to get you there, how long it's going to take to get you there. And so really, ideally, what you want to do to help you be a better trader is just kind of let the market come to you, and it will, and it'll, flesh out over time, right? And once you see a good setup, then you can get in there and capitalize off that move, okay? So let's look at Great Britain pound, Japanese yen. Hate this pair. So once again, boom, boom, bow. Looks like it's moving sideways. It's a bigger swath of a sideways move, but sideways nonetheless. And as you can see, yesterday, people poured into the yen, looks like, for whatever reason, and now you're in a situation where it's already penetrated this support zone, and the question will be, did it go low enough? Did it pull back hard enough that now it's going to penetrate back up? Will this actually become resistance? At one point it was support. Will this now become resistance? It's a lot of good questions there. Once again, this right here is just not enough clarity for me to want to get in here and start risking money, right? I'd rather wait. So I got a, some type of clarity, some type of price action confirmation that, hey, we're moving up, or hey, we're going to continue to move down towards this, this level of support, major support. But right now, you're not really seeing anything. And so when you're not really seeing anything, the best thing to do is just walk away from it, man. Take a break, and just say, you know what? Hey, I'm not going to do it. I'm just going to leave it alone. Go find something else to do. Find something else to trade. Because you do not have to force the trade. That's the worst thing you can do, is forcing the trade. The best thing you can do is wait for the trade to come to you, wait for it to develop, and then get in there. So even when you look at this on an hourly chart, you're looking at this thing, it's like, yeah, it looks like it's continuing to go down, like it's going down. But what you don't know, this spike right here, this pull down, and this push back up, if that's going to be the U-turn for this market. You don't know. There's not really anything right here that's kind of confirming or telling you what's going on either. So best thing to do, stay out of the Great Britain pound, Japanese yen. That's just me personally. Right? You may have a different spin on it. You may see it differently. You may see clarity here. If you see clarity here, go for it, man. Don't let me stop you. But I just don't see clarity on this one for me. What's the next one? The next one is going to be... We just said it, yeah. So once again, this is the one we're in right now. I think we just talked about this a little bit. Let's look at it again real quick. Nothing you don't want to do is get obsessed with just looking at the same currency pair over and over again. A lot of times you can get caught up with just staring at the screen, hoping something different is going to happen. And basically, you're just wasting your time. It's just, go do something, read a book, go play some video games, go watch TV, go ride a bike, do exercise, do something. Get out of the house. The cool thing about this pair right here, and I'll show you in just a minute. So, as you can see, you know, definitely in a downward trajectory, right? Right, it's moving down. Right, high, low, lower high, lower low, lower high, lower low, lower high, right? So we're definitely moving down. That's a given. We put the fibs on, right? So this is the A, B, and then C, retractment, D extension, right? Fill that one. A, B, C retractment, D extension, fill that one, right? And then A, B, right? This right here is supposed to be our C extension, our C retractment, and then it's supposed to go all the way down to our D extension, which the D extension is here. I put my price take profit around here, right? Even though I know that the D extension is here. And the reason being is because I don't have to capture the whole move. All I need is to capture, you know, a good portion of the move, and you're going to make good money, right? And so no need to be greedy. There's plenty of time to make money. There's plenty of time to make, you know, going to be opportunities to get back into the trade, even if we get stopped out. You know, you got to understand that. And the key to all this is to just take your time. Don't feel like you have to rush. Don't feel like you have to hit a home run every time you go up to bat. You know, just take your time, get on base, get some wins under your belt, get some consistent wins under your belt, get comfortable with winning, and then, you know, you get comfortable with cashing in. Now, as you start looking right here, you start seeing what's forming, right? Looks like it's almost kind of like forming a base of support here. And if you notice in the other currency pairs, like the one we just looked at with the I think it was the CAD and some other ones in Japanese yen. It looks like it's a base of support is kind of forming. So I think, you know, it looks like people are kind of putting money back into this currency pair right now. So that could be temporarily, or it could be something big. I don't know, right? I know that I want to capture as much as the profit as I can from what I've done over the last 2 days for this particular pair. So I'm okay with my stop loss being here, right? And I'm okay with my stop loss getting hit. If my stop loss gets hit, that's fine. I base it off of this spike here. Probably could have pulled it back up here. You know, it's more of a, you know, a swing high or whatever, right up in this area. More of a swing move, but that's okay. I'm okay with this right here. If it gets tapped, that's cool. We get out. Probably not looking to get back into this pair at the moment, because if this is a base for me, then that means the price is getting ready to push back the opposite direction, possibly for a little bit. And if that's the case, I'm ready for that, right? Because I already have something in place that I think is going to be pretty profitable for us on the next go around. Okay. So if you kind of see what I don't know if you can see this or not, but you see where price is kind of trending sideways here. And a lot of times when price is trending sideways here, it's trying to find direction, right? And what's happening is actually in the process to start trying to make a little bit of a U-turn, right? And it could be a retractment where price is going to retract for a little bit, or it could just be a full-blown reversal, right? There's no guarantee that, or there's nothing that says that price has to come all the way down to this level of support. It's just saying that in the past, this has been recognized as an area of support, and that typically when price comes down to this area of support, it U-turns and heads back in the opposite direction. Price can come down, you know, close to it, halfway to it, whatever, and then for whatever reason, decide to push back up towards the resistance. It just happens. You know, it's no biggie. These support and resistance lines, though, are there to get our attention, to make sure that when price comes close to those levels or price is around those levels, that those are levels that we pay close attention to, because then we can say, hey, you know what? We know if we're close to support, right, we want to be looking for buying opportunities, and if we're close to resistance, we want to be looking for selling opportunities. Right? That's all it's there for. Just, you know, then this stuff is written in stone, and if you trade like it's written in stone, then your account is going to be like a stone, you know, in a pool of water. It's going to sink straight to the bottom. The next one we're going to look at is the Great Britain Pound, US dollar, and this is the pair that I'm really particularly interested in. And the reason why I'm interested in this particular pair here is because I believe there's going to be some opportunity a little bit later on. And I told you, this right here is probably not going to pan out until, later this week, early next week, mid next week, somewhere around that time. Once price crosses this entry buy, then our price target should be up here. It's just that it's this type of pattern has occurred in the past pretty consistently with this particular pair. And I can see it still happening again here in the near future. But of course, price has a little bit of ways to pull back before it hits our entry points. And part of the reason why you see this big pullback in the Great Britain Pound is because of some difficulties that they ran into yesterday. I think they had delayed a vote. I have pulled up this information here. They had delayed a vote for the for Brexit because they didn't like there was going to be enough votes in place to be able to get the results that they wanted. So, with that being said, there's a little bit of faith lost in this whole process, and which caused the sell-off in that currency pair. And so what you're seeing today may just be a little bit of recovery going on, where folks coming back in and saying, hey, well, maybe it's not as bad as we originally thought it was, and we want to get back into this particular pair. And that happens a lot. Okay, just remember this pair here is pretty volatile, so if you're going to be trading it, trade safely in it. And just be careful. Oh, okay, ground will sleep less. You up? All right, what's up, bud? All right, good deal. So anyway, man, that is it for me as far as the currency pairs. Now, I will tell you this right here. One thing that we're going to be doing here, going in towards the new year, is I really want to, we've been sitting here, we've been doing this stuff with the London Open, which is cool, and I like doing the stuff with the London Open. But the reality is, with the London Open is, I think once you get a good trading strategy down, it's pretty easy to trade. I mean, I don't really see too much difference between this right here and just trading regular, any other currency pair. Because what I've done is kind of modify what the London Open is for me, for my trading style. A lot of people go in and they're trying to find the high and low of the day or whatever going in, and it just didn't work for me, right? When I done it, when I tried to do it the way everybody else was trading it, I just had bad results. Matter of fact, my count value went down significantly. And it was demoralizing, and I hated it. And it took me a while to be able to get my account value back up to positive, and let alone being profitable. And thank God I was able to do it. But we didn't do it trading like everybody else was trading. We did it, trading our own, our own style. So what I want to do, say all that to say this. I think one of the most important things that any of us can learn when it comes down to trading, excuse me, is the money management side of it. So with that being said, what I want to do over the next couple of weeks is, once I close out this position here now, what I'm going to do is, this position close out, we're going to start just randomly trading currency pairs, just randomly, right? But what we're going to do though, when we randomly trade these currency pairs, we're going to make sure that we use really great money management techniques, right? So we're going to do the whole 3-to-1 risk ratio, right? So, or 1-to-3 risk ratio, whatever. Where we're only risking $1 to get 3, or $1 to get $1.50, or $2, or whatever it is. We're just gonna make sure that we're risking less than what we're willing to, than what we're trying to make. And what we're not gonna be doing is we're gonna be doing it randomly. So we're gonna just, we're not gonna be caring about what direction the currency pair is going in, blah, blah, blah. All we're going to be doing is coming in this particular pair, we're going to say, hey, we're going to risk X amount of dollars, and boom, that's what we're going to do. And the reason why I want to do it is because we want to test this whole theory, this whole notion about risk management. Okay, our price target looks like it's hit. Let's see something here. Yep, price target hit. So our total was, we got $8,949.30 off the Great Britain Pound New Zealand dollar, and then we got $5,609 off of the Great Britain Pound Australian dollar, for a total of 14,500 and some odd dollar. I don't know what that is back there, but that's for the week. That's for like the last 2 days, like 2-3 days. That's not bad money for 2-3 days worth of work. 14 grand, I'll take it, right? Now the question is, all right. So now that we got that, this is great because now we can get into what I was wanting to do anyway, which is the experiment on the money management side of things, right? And that's what we want to do. We want to see, is it possible to be profitable over time and not really trying to go in and analyze the position and determine which way the price is going to go and for a reason why it's going to go that way. We're not even going to really care about it. All we're going to care about is making sure that we got the proper money management skills in place, that we're risking small amount of our account, and over time, will this actually pan out? So, that being said, I think I'm going to start on that tonight, or today, and just see how it goes. I love it. I think it's going to be fun, and something that we can do, just for the remainder of the year, and see how it plays out, and I think it'll be fun. Anyway, guys, if you got any questions, hit me up at Forbes Tech, questions at ForbesTechMagazine.com. Love to hear from you, for your thoughts, anything you think that we can do to make this community better for you, to help you be a better trader. Love to hear from you. Please feel free to share. At any rate, guys, I'm about to get out of here. That's it for me today. I don't have much. Just remember, look at that number again. It's pretty freaking awesome. 14,550 some odd dollars. I don't know what that number is right here. That we made over the last 2-3 days. That's pretty cool. If we can do it, you can do it. Remember what we're going to start doing now, though, is we're going to start just playing around with these money management strategies. And now we're going to be looking at price direction. We're just going to be looking at controlling our losses, right, and trying to maximize our earnings. And that's all we're going to be doing. Not going to be looking at direction, the price is going. We're not going to care what currency pairs we're in. We're just going to care about making sure that for every $1 that we risk, that we're trying to profit at least $1.50 for every $1 that we risk. So $1.50 for every dollar that we put up. That's what we're trying to get back. And we're going to see if we use proper money management, if we can come out profitable without actually going in and doing a lot of the analysis that we've been doing, or that you see other folks do as well. I think it can be done. So this is going to be pretty good. It's going to be pretty interesting. And I'm going to get started on this right now. So that way, when we come back tomorrow in about 24 more hours, we got something to look at, something to talk about, and something to work with. Anyway, guys, listen, I'm about to get out of here. You take care. I will see you next time. Lots of love to everyone that's out here to support the program. Grind more, sleep less. Once again, hey, thanks for checking in with us, and I will catch you guys next time.